Hi everyone, in this rather quick video I'll help you understand the difference between a mutual fund's net asset value, abbreviated as NAV, and the offer price, which is sometimes also called the public offering price. So at a high level, the net asset value, or NAV, is the value of each share in an investment company, such as a mutual fund. And the way you calculate it is that you take a fund's total assets. So this is the value of all the assets that the fund has. Maybe it has some cash and cash equivalents. Maybe it has invested in other securities like stocks and bonds. So you calculate the worth of all those assets. You subtract any liabilities so that you figure out the net value of all the assets, in other words, net of the liabilities, and you divide that by the number of shares. And it is an important calculation because essentially what it tells you is how much one share of the fund should be worth. And if you own some shares in a mutual fund and let's suppose you decide to redeem them, then essentially your shares will get redeemed at the net asset value. So in other words, if the net asset value of each share is, let's suppose, $20, and if you decide to redeem it, the fund will give you $20 for each share that you are trying to redeem. Now, in contrast, the offer price is the price at which each share is offered by the investment company, such as a mutual fund. And at first you might say, well, shouldn't the price be also equal to the net asset value? And the answer is no. Why? Because the mutual fund managers want to be compensated for managing the fund, and therefore they charge you a price that is somewhat higher at the time they're offering the shares to you. So the offering price tends to be higher than the net asset value. And the sales charge that the mutual fund will charge you is usually a certain percentage of the price that you are paying up front. And this sales charge is also known as a front-end load. More specifically, the relationship between the offer price and the net asset value looks like this, where offer price is such that when you multiply it by 1 minus the load percentage, that gives you the net asset value. What this equation is essentially saying is that when you go out there and buy shares from a mutual fund, this offer price already includes in it a certain sales charge. So let's suppose that sales charge is 5%. This is another word for load. So then 5% of this is going to go to your mutual fund manager, which means that 1 minus 5%, in other words, just 95% of this offer price is essentially the worth of the underlying shares in the mutual fund. And so conversely, you can also say that offer price is therefore the net asset value divided by 1 minus the load, where again, the load is essentially a sales charge like 5%. So with that in mind, let's do a couple of problems to really drive home this point. So let's suppose that we are told that there is an open-end fund, which is a different way of saying it's a mutual fund, and it has a net asset value of $13.50 on a per share basis. We are also told that it is sold with a front-end load of 5%. The question is, what is the offering price or the public offering price? So I've jotted down the information that is given to us, the net asset value, the front-end load. We are tasked to find out the offer price. And as I just showed you, the offer price is essentially the net asset value divided by 1 minus the load or the sales charge. So really all you have to do is say equal to 13.50 divided by 1 minus the sales charge or the front-end load. And if you do this, you get $14.21. So that is the offer price. Simple as that. Let's try one more. In this case, you're told that there is a mutual fund which has an offering price of $12.90 on a per share basis. So this is the price at which these shares are being sold. And the fund is also sold with a front-end load of 5%. So this price includes a 5% sales charge. So 5% of this is going to go to the mutual fund manager. So the question is, what is the net asset value? So again, what I've done is that I've jotted down the information that is given to me, the offer price, which is $12.90, the front-end load is given, which is 5%, and recall that the offer price times 1 minus the load is the net asset value. In other words, only 95% of this offer price reflects the underlying net asset value. So that's all that I'm going to do. I'm going to say equal to $12.90 multiplied by 1 minus the 5%, which is the front-end load or the sales charge, and boom, $12.26. That is the underlying net asset value. Remember that the net asset value is always going to be less than the offer price. So if you ever do your calculations and find that that is not the case, you've probably done something wrong. If you found this video useful, click the like button and subscribe to the channel. And feel free to ask any questions using the comment section. Happy learning.